NIO stock continues to crash, and it has been crashing for a pretty long time now. And just today they announced earnings, and the earnings were pretty bad. They actually canceled their earnings call, which in my opinion is incredibly irresponsible of management. And not that I had a lot of faith in management to begin with, but after this I've lost some faith in them as well. And the stock just completely crashed, selling off by over 20% in a single day. And again, it's really been trending downward as a falling knife throughout this entire year. Now, NIO stock is actually a pretty popular stock out there because it has oftentimes been compared to Tesla, which is a much bigger company. Is not a fair comparison because Tesla is pretty much a global company at this point, and NIO is just pretty much a Chinese EV startup rather than Tesla, being much bigger. Anyway, when looking at NIO, it is a pretty popular stock that a lot of people like to track and some even invest in them. And because of that, I've actually received a few comments already asking me to give an update on NIO stock and to share my opinion on everything that's going on. So I am going to do that, but I just have to let you know that I literally just pulled an all-nighter working on a completely different video, and I finished it, but I was talking about jd.com, because that's a stock that a lot of you were requesting that I do a review on as well. So I literally just spent an all-nighter working on that video, so I'm very tired and my voice may not sound right. I may sound a little off, so I'm just giving you a heads up. Please forgive me if I sound a little off. Anyway, that JD video will probably come at a later date, maybe tomorrow or the next day, but today we'll focus on NIO stock. Anyway, this should be a very fun video. I hope you guys enjoyed. And by the way, if you appreciate me staying up all night and still working on this, even though I really want to go to sleep right now, but I'm trying to get this video out for you guys. If you can appreciate that, then please consider hitting the like button. It really means a lot to me. But with all that said, let's go ahead and get started. What's up, everyone? My name is Ale. Welcome back to my world of stocks. Okay, before we start, just gotta quickly let you know, and a lot of you already know this, but in case you don't, I do actually own a very tiny position in NIO. It's very small. In my stock portfolio, it's only about 2% at this current time of my portfolio, so it's very insignificant. It doesn't really impact my stock portfolio at all. Just to give you some context, my portfolio can go up or down by easily more than 2% in a single day on occasion, so NIO doesn't really impact it. That goes more towards my biggest stocks. My biggest stocks really have a lot of influence over my portfolio, like Microsoft, Amazon, Disney. Some of those are like 20% or more of my portfolio each, so those are really big positions. But anyway, when I look at NIO, I really just kind of invested in NIO as a not even invested. Invested is not the right word. I saw it as a kind of long-term gamble. It's a speculative, very high-risk stock. And when I look at my portfolio, I usually have about 10% of my portfolio that I allow myself to use to kind of play around and gamble with some high risk, high reward kind of speculative stocks. For example, the only other spec stock that I do own at the moment is Tesla. And Tesla is actually a bigger position. It's about 6% of my portfolio, and NIO is about 2%. So altogether, my spec stocks make up about 8%. Now you might be wondering, why do I even consider Tesla a spec stock? Because a lot of people are extremely bullish on Tesla. And to tell you the truth, over time, I've become much more bullish on Tesla, and over time, I've become much more bearish on NIO. But the reason why I do still consider Tesla speculative is because they have struggled to be consistently profitable. Now, I know a lot of people will say that any stock in the stock market is speculative. We're speculating no matter what we invest in, but I would just argue that some stocks are noticeably more speculative than others, because if they're not consistently profitable and they don't have a very good track record and a solid balance sheet and solid performance and a good income statement, all those kinds of things, then they're much more risky, and those are the ones that I consider to be very speculative, because it's hard for me to envision them as sustainable, good long-term investments. So when I look at a stock like Tesla, it is one that I'm very bullish on, and I think at one point I won't consider it speculative anymore. But at this moment, I do still consider it a little speculative. And with NIO, it is very speculative, and I've mentioned that in many videos, because NIO loses hundreds of millions of dollars a quarter. That is not sustainable. You have to make a change there. You have to improve. Now, If you're wondering why NIO has been crashing so much this year, well, there's a few reasons for that. Now, NIO absolutely had a ton of potential because they are a Chinese EV company in the biggest EV market in the entire world that is growing by very large rates. Although we'll take a look at that market in a second, you might be surprised to find that there's been some struggles in that market as well. But anyway, when looking at the Chinese economy, it's been really struggling. I think as a quarterly GDP rate, I believe it is the lowest it's ever been in like the last 3 decades. I mean, the Chinese economy is really struggling, and the whole trade war is only making things worse, and the automotive sector is really struggling as well. And there's even some struggles in the EV kind of subsector as well, as I'll show you in just a second. On top of all of that, there's seasonality in the automotive market. The automotive sector is one of the most seasonal kind of markets out there. And because of that, NIO had a very kind of rough first quarter where sales really went down. Second quarter as well, they had a lot of battery recalls for thousands of vehicles where the batteries, they had to basically replace them. So that was a big issue as well. And then you also have the ES6, which is a smaller kind of crossover SUV coming out that just recently launched and is starting to pick up in sales now, which I'll show you in just a second. But you could definitely make the argument that that cannibalized a lot of the ES8 sales, so that really hurt sales as well. And then on top of all of that, you also had EV subsidy cuts. So all of this kind of snowballed into just a horrible year for NIO, and in my opinion, management has not really done a good job either. Anyway, there is a lot to talk about, but let's just go ahead and start with the stock. And let's take a look at how much it's dropped, and then we'll go into the earnings, and then I'll give you my kind of opinion on the business and let you know if I think there's anything that can really be salvaged there, or if they're just going to really just go all the way down to zero, which is a very real possibility at this point. But let's start by taking a look at the stock. Okay, now taking a look at the stock, they are down over 20% today and around 35% in just the past week alone. Now, they only recently IPO'd last year and were really flying high at the start of this year, where they climbed all the way up to break north of $10 a share, which is actually where I did cash in some, small profits, because it's not a big position for me, but I did cash in some profits at those levels. But then the stock turned into a falling knife shortly after, crashing all the way down to just $2 a share, and they actually broke down to the $1 range at one point today. So I'm guessing that it'll probably hover around that $1 range, at least in kind of the short term, because things are looking really ugly at this point. In any case, today's drop mostly has to do with their earnings report that failed to meet expectations, even though those expectations were pretty low to begin with. And this earnings report has actually been delayed several times already, but they even went further than that and they canceled their earnings call, which is an incredibly irresponsible, really weird move for them to do. In any case, vehicle sales dropped by about 8% from the previous quarter, and we can't really look at year-over-year figures because they weren't really selling cars a year ago, but quarter-over-quarter, it was a drop of about 8%. Now, their vehicle margins also dropped to negative 24% versus negative 7% the previous quarter, so a huge drop there. Total sales also dropped by about 7.5%, and their net loss was almost $500 million, which was an increase of over 25% from the first quarter. And the really bad news is that they're starting to run low on cash that helps them survive, as they only have a little over $500 million in cash and short-term investments, which is about the same amount that they burned in a single quarter. Now, the only good news I saw here is that if you exclude the recall, their numbers would have been a lot better, and their vehicle margin would have actually improved quarter over quarter to negative 4% from negative 7%. So they would potentially be heading in the right direction, but considering how much money they're losing, it seems very difficult that they'd be able to survive a lot longer without dramatically turning their business around, and that also seems very difficult given the weakness in the Chinese macroeconomy, with the whole trade war making things even worse. Now, we're currently finishing up the third quarter, so they already have delivery numbers for July and August, which are the two first months of the third quarter, with September being the last month of the quarter. But things are already looking pretty bad, as they only delivered 837 vehicles in July due to a battery recall for close to 5,000 ES8s, which forced them to prioritize battery manufacturing rather than focusing on vehicle deliveries, and that hurt their month pretty dramatically. Now, for August, it gets a little tricky because they did grow by 132% to almost 2,000 deliveries, but the large percentage increase can be argued to be due to the really low number in July. However, if you look at their deliveries in each month this year, their August numbers are the highest in the entire year. That actually does make sense given that they're now delivering their cheaper and smaller crossover SUV called the ES6 that appeals to a much larger market, and it also makes sense given that the auto market is very seasonal on its own, usually favoring the second half of the year. And as a result, they are guiding for this quarter's deliveries to increase by around 20%, although sales growth will be much lower at only around 5 to 10%. Still, the seasonality boost can potentially be different this time, given that the Chinese economy is looking extremely weak right now, as even electric vehicle sales are feeling the pain, which is something that I don't think anybody was really expecting, but EV sales in China actually declined year over year in each of the past 2 months, according to the website called Quartz. As a result, NIO CEO mentioned that the weak economy and market conditions are forcing them to make changes in an effort to adjust. They plan to do this by driving sales through technological improvements, including longer battery ranges, and by cutting costs through a workforce reduction of around 2,000 people, around 20%, and spinning off some of their non-core businesses by the end of the year. But how much will all of this help? I honestly have no idea. I mean, as sad as it is to see people lose their jobs, the cost cutting is definitely needed given their rate of cash burn. Now, I suppose one bright spot to all of this is that the giant Chinese company called Tencent, which by the way is a company that I'm actually invested in myself, and Tencent is actually invested in NIO themselves as well. But anyway, Tencent, along with NIO CEO Bin Li, have agreed to purchase $200 million worth of convertible debt that can later be converted into stock. That usually means that whoever made that purchase likely believes in the company and that the stock will eventually go up. And on one hand, it's good to see the CEO believe in the company right along with Tencent, which is a company that has been very successful in the past in all of the different investments that they've made in several different companies and in different kind of markets and areas. But on the other hand, this could also mean that it's been difficult to convince investors to jump into NIO, so the CEO had to make a big purchase himself. That's something to think about. To be fair, there was also a recent deal for almost $1.5 billion from a Beijing-backed investment company, but still at the rate that NIO is burning cash, it's going to be really crucial for them to improve their losses dramatically, and the only way to do that is going to be to generate much higher sales. But that's a tall order given the state of the economy and the entire trade war have only gotten worse over time. For me, this remains a long-term gamble because of the prospects of the Chinese EV market, and especially if a trade deal gets done, then we could see the economy improve and that market right along with it. But right now, the Chinese consumer is probably not that strong, so expecting a new luxury electric vehicle startup to perform well at a time when the competition is really ramping up and Tesla is right around the corner finishing their manufacturing facility, and they're about to pump out Model 3s and eventually Model Ys that will also compete with NIO's crossover SUV. Well, it's going to be a very tough road for NIO, to say the least. Now, the Chinese economy is really struggling, and you have the trade war, both of which continue to get worse over time. So to ask the Chinese consumer to spend on big ticket items like new luxury electric vehicles from a startup that hasn't really proven their brand yet, that's a tough ask as well. So I just see a very rough road for NIO. Now, at 2% of my portfolio, what am I doing? Am I buying, holding, or selling? Well, am I buying more at these lower levels? Well, no, I'm not really buying because of the reasons I just told you, but also because it is a speculative company that loses hundreds of millions of dollars a quarter. It is not a company or a stock that I want to have any kind of a meaningful influence over my portfolio. At 2%, it does nothing to my portfolio. So at 2%, I'm comfortable with it. Now, I did lower my cost basis down to the $4 range, which I'm comfortable with, but I stopped buying at that point, and I've not bought ever since because I just don't see the need to buy more and to be more exposed to it. It's a spec stock. I just don't want any more. It is what it is. But am I selling because of all the negativity? Well, no, I'm not selling either because the stock has already crashed by such a large amount. At this point, it's either going to go to zero or it's going to recover. And if it goes to zero, it doesn't really matter to me. It's 2% of my portfolio. That even though I made a horrible call on this stock, the good thing was that I kept it at such a tiny position. So now if it goes to zero, it doesn't really bother me. But if it recovers, it could potentially, if it were to become a big EV player in the Chinese market, this could be potentially a stock that trades quite a bit higher and gives me a nice little profit that I turn into another investment. So at this point, I might as well just wait and see what happens. Anyway, that does it for this video. I am so tired. I really want to go to sleep. So I'm going to edit this video. I'm going to post it, and then I'm going to just go straight to sleep. But thank you so much for watching, for hanging in there. I'm sorry if I kind of rambled on. I'm not even really thinking straight, to be honest, because I'm so tired. But thank you for watching, and I'll catch you guys in the next video. Take care. Bye-bye.